Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Structured Warrants, Past and Present. So my name is Shen Chu. I'm the moderator for this session. Now, structured warrants is a little magical tool that can help us to gain leverage exposure to a certain stock or underlying, like index, by using just a fraction of our capital. So it's so magical that it can help us to amplify our gains. But if the market goes against you, it can also amplify our losses. So today, our topic is a bit more casual. We will look into the past, which is the history, and look at the present, which is where we are now, and learn how to use these tools to help us in our tactical trades to gain amplify returns in the certain underlying. So before we begin, as usual, disclaimer, whatever we share in this webinar is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that were mentioned here. If you decide to make any investment decision, you are solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. He started off in the capital market sector as a management associate at Opus Asset Management, a local fixed income fund house. He rotated primarily between the business development and fund management department, serving institutional, corporate, as well as retail investors. Currently, he's an analyst in the equity and commodity derivative division of Maybank Investment Bank, which is a leading issuer of structured products and structured warrants in Malaysia. So far, he has conducted multiple webinars with an accumulated audience of over 600 investors and clients with over only 3 years of capital market experience. He is currently responsible for creating content related to structured warrants on Maybank IB's Telegram channel, Trade with Maybank, which currently has over 23,000 subscribers. He holds a Bachelor of Science in Business Administration from the University of Nebraska-Lincoln with a double major in Finance and Economics. He's licensed by Securities Commission Malaysia as a capital market services representative for both equities and derivatives dealing. So without further ado, I would like to introduce our speaker today, who is none other than Mr. Jordan. So Jordan, how are you today?
Hello, everyone. Hello, Shane. Thank you for the introduction. I'm doing good. How about you?
Right, fantastic.
Mm,
So I'll hand over the session to you. You may begin with your screen sharing.
Okay, sure thing. All right, so super happy to be up here on live chat again to do one of these educational webinars and of course to discuss about structured warrants. So to first introduce a little bit more about myself, as Shane mentioned, I am here on behalf of Maybank Investment Bank. So I am with the Equity and Commodity Derivatives Department. So mainly we handle derivative products issued over your equities. So whether if it's foreign shares or local shares, we also do products that are issued over commodities as well. So an example for that would be like our crude palm oil futures structured warrants. So of course, structured warrants is one of the products that we are in charge of. And on a day-to-day basis, my scope of work would look a lot like, would include handling the Maybank Warrants hotline, for example. So the Maybank Warrants hotline is a dedicated hotline that we set up for our investors. They can always call this number during market hours if they have any questions regarding our Maybank IB structured warrants. So on top of that, we also manage the Maybank Warrants website. So on the Warrants website, we host quite a range of warrant tools, and these were created to help our investors trade and analyze structured warrants on their own as well. So some of these useful tools, or one of the most used ones, would be like our warrant live matrix, and of course our warrant search as well. So the warrant search is kind of, well, it's effectively a search engine and can be used to filter out particular warrants you're looking for. And on top of that, it provides all the parameters of each warrant as well. So not only that, we also have a Telegram channel. If the audience here is already active on Telegram, we have a Telegram channel named Trade with Maybank. So on using the Telegram channel, it is a medium for us to share on any educational content that we think our investors would be interested in. We also share daily news, daily highlights on particular public listed company news that we could tie it back to structured warrants issued by ourselves. So if this is something that you are looking for, if these kind of information, this kind of updates is what you want to receive, please feel free to check out Trade with Maybank on Telegram and feel free to subscribe. So currently we have over 24,000 subscribers, and it's not just us structured warrants yapping on the Telegram channel. We also work with another department, Maybank Research, where they share their insights, their analysis on particular sector outlooks, on stock picks. And around this time, halfway through the year, they'll be sharing a lot on their second half market outlook as well. So for today, instead of just going through the basics of structured warrants, like what is effective gearing, what is delta, what is sensitivity, like we used to do, I wanted to do things a little differently. And I want to bring the audience here tonight back in time. So today we're going to talk about we're going to talk about when were structured warrants first introduced to the Malaysian retail market. And then after that, we're going to talk about when did derivatives as a whole landed in Malaysia. We're also going to take it a step further, and we're going to talk about when were derivatives created in the first place. We're going to talk a little bit on who was the first options trader in the world. So for those of you who are new to structured warrants, this could be a good introduction to this short-term trading tool, along with the other derivatives that I will cover. And as for the seasoned investors, I know there are quite a few live chat followers who already have plenty of experience trading structured warrants. So sit back, relax. This could be a quick and fun crash course for yourself. So let's go ahead and get started. So structured warrants, at the end of the day, are a derivative instruments. And as for all derivative products, they do share quite a few common traits. And first and foremost, it would be that derivatives are always issued over another underlying asset. So the name is kind of straightforward in that sense. Derivatives derive from. So the value of all derivative products are dependent on another underlying asset. So derivatives can be issued over equities, it can be issued over your commodities, ETFs, and even currencies. So investors to definitely take note that derivative products are also a legally binding contract. So for example, if you are an investor who trades crude palm oil, when the crude palm oil futures expire, for example, the futures holder would actually have the obligation to receive or deliver the physical crude palm oil at the settlement date. So something to take note of, something to understand before investors invest in derivatives. Thirdly, another common trait that most derivatives would have would be an expiration date. So like we mentioned, crude palm oil futures has an expiration date as well. And normally for crude palm oil futures specifically, that is in the middle of the month, the 15th of each contract month. So the expiration date of derivatives is also what gives it time value, like we know in structured warrants. So it's something important for investors to look at to understand when is the derivative product expiring before they invest as well. So derivative products have been getting more and more popular among investors for those few reasons as well. Since it gives investors the flexibility to choose whether they want to have long exposure, short exposure, and they can effectively choose which underlying asset they want exposure over. So just like structured warrants, for example, they have those benefits. On top of that, it only costs a fraction of the underlying asset price. So I've talked about a couple of derivatives so far. I mentioned crude palm oil futures, and of course, I just talked about structured warrants as well. And not sure if the crowd here would like to take a guess. What other derivatives that has been relatively popular throughout history? Okay. So one of them would be forwards, for example, our forward contracts. Another popular one, which is still popular today, would be our listed options. Okay, so Shunken from the crowd mentioned swaps. Swaps are definitely used much more by corporates. Okay, PK Lim got it right. Options is definitely one of the most traded derivative products as of today. And I will cover a bit on the history as well as how these derivative products work throughout my presentation. So when we talk about these kind of derivative products, more complex, this kind of financial engineering, right? Most people would assume that these products were created on Wall Street. But however, the origin story would actually bring us back to more than 2,000 years ago to 6th century BC. This is actually a pretty well-known story. We'll have to go to Greece to listen about this, but I remember also reading about this story in the CMSRL textbook when we were taking our licensing exam. So back in ancient Greece, there was a guy named Thales. So Thales was known for being a philosopher, and just like most philosophers back in the day, they were not very rich particularly. But Thales was a man of science. He was interested in astronomy rather than the common mythology Greek gods that was more of a popular belief back then. So coincidentally, Thales grew up in the town of Miletus, Greece, where it was one of the main olive producing cities back in Greece. So how did Thales make use of these particular skills to earn himself to earn himself a great financial gain? And how did he, in a way, traded options back in the day when there was when this kind of things were not even discussed about? So, using his understanding and his passion for astronomy on that particular year, 6th century BC, he saw or he predicted that the yield for olives for that year was going to be particularly good. And just to give the audience here some context. So just to give the audience here some context, olives have 3 harvests in a year. Normally, the first one is in October. They call that the early harvest. And then the main harvest, the traditional harvest, normally happens in November. So these 2 harvests are normally the highest yielding harvest for the year. But on that particular moment, on that particular year, Thales foresaw that the late harvest, the 3rd harvest of the year, which is usually during the winter time, was going to yield relatively well as well. So what did Thales do? He used the little money he had and he went to the olive press owners. So olive press is this machine I have on the screen right here, and is the traditional device they use to turn olives, palm olives into olive oil. So Thales went to the olive press owners and told them, hey, usually the late harvest, you guys don't really utilize your olive presses that well. Let me put down a deposit. Let me pay you a premium so I have the rights to these olive presses past December. And that is exactly what Thales did. And for the olive press asset owners at the time, it was probably a good deal. I'm going to lock in on some revenue since I might not need this machine later on anyway. So finally, when Thales's prediction came true, when the late harvest was yielding just as much as the traditional harvest that year, demand for the olive presses suddenly shot up. And because he had a majority, well, he had the right to the majority of the olive presses at the time, he could charge the rental for these machines at a higher price. And that is how he used his insights, turned it into value to his own advantage. So if I bring the timeline closer to the modern era, during the 17th to 18th century, future delivery of commodities and securities were starting to become more common in Europe as well as in Asia. And for Asia, it was particularly in Japan. So the derivative product of that type was the forward contracts that I mentioned earlier. And why forward contracts were so useful back then was mainly due to the agriculture sector. So in Europe, for example, these forward contracts were used to trade silk, to trade wool, to trade cotton from Italy. And in France, for example, people were using forward contracts to lock in on the prices from wineries. Another extreme case that I wanted to just share with everybody, and something that you all might have heard of before, was that tulips was a real frenzy back in Amsterdam during the 1800s. So during that Tulip Mania, during that few years of high demand for tulips, people were actually using forward contracts to trade and to lock in on the prices of tulips as well. But for the case of tulips, that didn't last very long. That's because at a certain point, when people started realizing that the demand for tulips was not very intrinsic, so the demand suddenly fell off, and the hype would have died down in just 3 to 4 years. So in that environment, the forward contracts started becoming more of a speculative trade than a practical use case. So I mentioned Japan earlier. During the early 18th century Japan, Osaka in particular actually took center stage in the world of finance. And that is because they created what we know as the Dojima Rice Exchange, which is actually one of the first commodity exchanges in the world. So would anybody want to guess what was the commodity that they were trading? Okay, you guys don't have to answer that. So that was definitely rice. And the exchange was actually created and founded by the main rice merchants of Japan in the time. They called this upper middle class the samurai class back then. So the Dojima Rice Exchange and what kind of value that it brought to the rice merchants as well as to people who had demand for rice back in the day. So because the Dojima Rice Exchange was a centralized exchange, right? It was a centralized place where rice merchants could go and refer to information on rice prices. In the same time, they also standardized the forward contracts for rice, and they called it rice bills. So with a centralized place of information, everybody could refer to right away, oh, what was the last batch of rice? How much were they sold for? So interesting to know that the exchanges that are still popular today, most of them would have referenced the Dojima Rice Exchange because it was the first exchange ever created. And successfully, these samurais who created this exchange will manage to turn a local commodity like rice into a national economic benchmark. Suddenly, anybody around the world who wanted to check on the price of rice, they could refer to the Dojima Rice Exchange. So let's talk about who referenced the Dojima Rice Exchange. So that would bring us fast forward a little bit down to the 19th, 20th century. And this was back in America. So during the 19th century, that was when America was at its peak for the economic progress in terms of finance and in terms of agriculture. But they faced the same problem in terms of inconsistency with the forward contracts because there was no centralized exchange, there was no centralized place for information. So during that time or before the exchange was created, it was not always easy for individual farmers to secure buyers for whatever they were producing. And back then, this would be something scary, right? Imagine if that you were a farmer yourself, your livelihood for the next 12 months, your livelihood for the next year would fully depend on how much you could sell your produce for. So that was the practical use case for forward contracts, and that is why it was so widely used back in the day. But during the 19th century, farmers from this place we call Chicago, Illinois. So strategically, the position of Chicago, which is close to the agricultural states of the US, which is that middle segment that you see on the map. So Illinois, Chicago was also one of the first cities to really pick up industrialization. So it was a perfect place for them to create this centralized exchange that we call the Chicago Board of Trade. So the aim here was the same as the Dojima Rice Exchange. They wanted to create a transparent and centralized marketplace. In the same time, they wanted to standardize contract sizes. And when you standardize the volume, you standardize the contract size of each contract, prices would follow to stabilize. So this was actually the starting point of what we know today as the CME Group. And the CME Group is actually one of the world's largest derivatives exchange operator as of today. CME here actually stands for Chicago Mercantile Exchange, and they are the main group running quite a few exchanges in the US, mostly futures exchanges. Now, if we fast forward some more, if we go to a more time closer to where we are now, we're going to the 1960s. So during the 1960s, there was another kind of derivative that was brewing in the background and was getting ready to have its time to shine. So actually during the 1960s, share trading, company stocks were already drawing very, very high retail participation. And since the stock exchanges were founded close to 200 years ago, back in 1790, so that's when the first stock exchange in Philadelphia was founded. And then I think 2 or 3 years later, that's when the New York Stock Exchange was born. So stock markets in general during the 1960s was already common. It was already very well familiarized by the retail participants. But stock options was having troubles in creating the same kind of anticipation, the same kind of demand. And especially it was hard to create a active secondary market due to some of its operational difficulties. Because imagine there is no centralized exchange. So a dealer from New York, for example, he would actually have to go down his client list and start calling one by one, maybe trying to sell a super in the money option for another client that is trying to offload their position. So just overall, that environment was not very efficient and it's not very transparent as well. So with the success of the CBOT, the Chicago Board of Trade, and what they did for futures, they wanted to replicate the same thing in 1973. And that's when the CBOE was created, the Chicago Board of Options Exchange. So that was founded in 1973. And actually right now, the CBOE is one of the most active options exchanges in the world. In current times, the CBOE is actually responsible for 50% of the options traded in the US. And NASDAQ, a common stock exchange that we all know, they also have their options exchange. They would have been responsible for 22%. So that's just for some context. So actually before the CBOE was created, the regulators, the SEC in the US actually had to set up a little bit more proactive measures because options, just like structured warrants, are a risky investment. You can lose all your value in one day. So just like TK Lee mentioned, 0 day to expiry options are something that is super popular right now. So just to continue my point a little bit, before the CBOE was created, the SEC had to put in some extra measures to protect investors from losing, well, most of their savings, for example. And what they did, one of the examples of what they did was to have restricted options. So whenever the option was too out the money and it only the value of the option is only half a point, so 50 cents, then they would not let buyers enter into those option positions. And it's mainly to avoid investors from trading a very out the money options, which statistically would normally settle out the money as well. So like PK Lim mentioned in the comments, this is something that we still see in the options and structured warrants market today, where a lot of investors like to trade zero DTE out the money options, because that's when they can capture the highest gamma. That's when they can earn effectively the most. So one scary statistic that I found, and this is at the end of 2024, 51% of the S&P options traded in the US were 0 day to expiry, meaning these were options that were expiring on the same day itself. So something to keep note of, something to think about. Back then, regulators like the SEC would have to restrict retail investors from buying such out the money options so they wouldn't lose their money, their investment, their funds. But if we fast forward 50 years until today, the demand from the retail participants is that they actually want zero day to expiry options. And with a better understanding, there's also benefits to trading zero DTE, especially if these investors are already trading on an intraday basis, right? If their plan was already to get in and get out on the same day. Because with 0 day to expiry options, they can kind of eliminate or reduce the impact of theta, your time value decay, and they are able to capture more of that price change from the intrinsic value alone. Now, if we fly, okay, now let's talk about our beautiful home country of Malaysia. When were derivative products first introduced to our country? So although the Malayan Stock Exchange was established back in 1960, our first derivative breakthrough actually only happened in the 1980s. So the 1980s is when Malaysia introduced the first ever crude palm oil futures. So this was the first ever futures listed over crude palm oil as the commodity. And not long after, it has become a global price benchmark for crude palm oil prices, which is still very relevant, very applicable today. And Malaysia is a suitable country to list a product like this because we are actually the second largest producer of crude palm oil in the world. And we're right behind Indonesia. So here I have a little bit of data I pulled from Bursa. Basically, it's showing us the exports. Okay, so literally the exports of crude palm oil. We're comparing the first 10 months in 2023 versus the first 10 months in 2024. So you realize that Indonesia dropped slightly. Malaysia took the opportunity to increase its market share. So the reason why Indonesia's export fell as well was because of an internal policy shift that they had. Mainly, they wanted to make sure that Indonesians businesses in the country were getting sufficient amount of crude palm oil first. Now, what about structured warrants? Because that's the topic here today, right? We're here to talk about structured warrants. So structured warrants actually only got first introduced to the local retail market in 1995. That's when the first ever call warrant in Malaysia was listed. So interestingly, it was a call warrant issued over Maybank. And the issuer at the time was CIMB. So people in the market sometimes would call CIMB as the tyco of the structured warrants market in Malaysia. However, participation back in 1995 all the way to 2005 was not particularly great, right? It was kind of a trial and error period where the regulators and the issuers were trying to figure out what was the best way to liven up this market. So in 2005, the Securities Commission actually introduced something we call the Enhanced Structured Warrants Guideline. So this is actually something more for the issuers, and it was a way for them to standardize the process for issuers to be a participating organization in the structured warrants market. So to give the audience a sense of the growth since 2005, if you fast forward 30, 20 years, this is some data we've gathered as of last month, and it's technically showing us what is the total warrants outstanding in the market. So the latest data, the most right data point would be as at end of last month, as at end of May 2025. So over here, you can see that the yellow line, Maybank ourselves, as at end of May, we had an outstanding warrants of close to 1.2 billion. So a little typo on the left there, the numbers here are actually shown in billions. So we have 1.2 billion warrants as at end of May, basically held and bought and held by our investors. So overall, if you look at all the issuers in the market as well, and this goes back all the way to 2017, the overall levels of how much warrants are being bought and held by investors has really risen throughout the years. And sorry that the data here is only limited to 2017, but we'll go through a little bit on how the issuers have evolved since 2010 all the way until 2025. We're also going to talk about the traded volume as well as the active count, how many warrants are listed on average in any given month on those years. So we'll cover all that in the next few slides as well. But that growth that we're talking about from 2005 all the way until 2025, what are the possible factors that have created such a lively market that we have today? So we can contribute this to a few things. Well, first of all, would be a streamlined listing and approval process. So like I mentioned, in 2005, they introduced a enhanced structured warrants guideline. Actually, in 2009, they amended the guidelines a little bit as well. And the regulators are definitely updating this, improving these processes along the years. So not only that, the issuers themselves were providing better transparency, more disclosures, and the hopes of that was to improve market confidence, well, to the issuers and to structured warrants as a product. So if you go onto the Bursa website today, you can actually find a lot of data regarding structured warrants all the way back to 2003, I believe. So most of the data points that I have here tonight are also pulled from Bursa's own website. If that is something that interests you, please feel free to go on Bursa and check those data points out. So not only that, actually another important factor throughout the years is that the demand side, the retail investors, they have to understand what the product is in order for them to be familiar and comfortable, and in that order, they would know better on how to use a product like structured warrant to their advantage. So this is something that was set very early on by the regulators and agreed by the issuers as well. It was actually part of the structured warrants guideline that issuers should provide education to investors instead of just listing the product and selling it. So this is something that us in Maybank IB truly believes as well. That's why we do a lot of these educational sessions like tonight. So not only that, actually since 2005, there were 4 issuers as of today, we already have 8 issuers in the market, and so that is something that has grown relatively steadily throughout the years. But we also have to give credits to the issuers to continuously issue, to continuously promote, and that's without that, we might not have the lively structured warrants market that we do see today. So to highlight the importance of issuer participation, I'm going to show some of the data points that I collected from the Bursa website, like I mentioned, throughout the years. So in 2010, still the early periods of structured warrants being introduced in Malaysia, there were actually 4 main issuers. So the first one I mentioned was the Taikor CIMB Bank. Back then, another very active issuer was also OSK Investment Bank, followed by Kenanga Investment Bank, as well as M Investment Bank. So these were the first 4 main issuers during the time. And OSKIB was actually one of the first issuers to issue foreign underlying shares as a structured warrant, and that was back in 2007. So I managed to dig it up a little bit. The shares that they issued, the first foreign structured warrants, and of course they were core warrants as well. These were ICBC, so your Industrial Commercial Bank of China, as well as PetroChina. So it was still blue chip stocks on the Hong Kong Stock Exchange at the time. So back then, in 2010, interestingly, issuers could also decide whether the structured warrants they issued were physically settled or cash settled. So there were structured warrants that allowed you to settle for the underlying asset, for the underlying shares as well. Not only that, back then issuers would also issue a structured warrant that settled American style instead of just the common European style that we see today. So actually, if you go and look into the base prospectuses that the issuers have as of today, we actually are still allowed to list American style structured warrants, but it just in terms of demand, it has been less and less asked for. So it's not something that we see a lot on the market today. Most of the structured warrants we see now are cash settled, and they are also settled in European style. So only at the maturity, the warrant will be exercised. For people who have not heard of American style structured warrants, basically the warrant holder has the right to exercise the warrant at any given time throughout the warrant's tenure. So if it was a warrant that was in the money, deep in the money, for example, the warrant holder might not want to wait or might not think that there is further upside. They can definitely just exercise the American option and gain the full intrinsic value of whatever the strike versus the share price was of the time. Now, if we jump 5 years ahead, the number of issuers actually grew to 6. So we have our original 4. And just to give a little backstory as well, in 2012, RHB actually acquired OSK Investment Bank for 1.95 billion ringgit. This was back in 2012. And this was done mainly because RHB Bank was trying to expand its footprints in ASEAN, and that included OSKIB's structured warrants business in Malaysia as well. OSK later on pivoted into more into property. So around the same time in 2012, Maybank Investment Bank rejoined the market, and not soon later, the first ever foreign bank to issue structured warrants, Macquarie, also joined the Bursa Malaysia market as well. So Macquarie was actually one of the first issuers to provide the trading tool we know as the Live Matrix today. So just a fun fact over there. And it was actually also the same time in 2015 is when the regulators and the issuers decided that, okay, let's just set for all structured warrants to be cash settled. And this was mainly due to some operational difficulties. You know, if we settle the structured warrants in shares, Share transfer definitely takes much longer time as compared to settling in cash, and the transfer of shares will almost always result in some odd lots. So if after we round down the odd lots, the issuers will still have to pay the remaining the remaining cash amount and return it to investors. So this was mainly from an operational standpoint. Now, what about the landscape we have today? Fast forward 2025, modern day present. The number of issuers grew slightly again. The 8 I shown earlier, Afin Huang also joined the structured warrants market, and to include the most recent addition, we have a CLSA who joined the structured warrants market as well. So it was around the same time, this time, where Bursa actually extended the approved underlying securities list for structured warrants. So now issuers could issue structured warrants over ETFs, over put warrants, and as well as commodity futures as well. So some examples of this would be like Maybank IB's recent issuance. We do have a GLDHK ETF structured warrant, your gold, your gold Hong Kong structured warrant, something that we issued just a few months ago. We also have our crude palm oil futures structured warrants as well. So just for us to experiment whether if there is demand in the market for these different underlying assets, these different exposures by the retail investors. Another regulation change, I think this happened in 2023, 2024, the regulators announced that the market cap requirement for companies we issue structured warrants over, at first it was R1 billion at least for market cap. They reduced that to 500 million. So effectively, issuers now had a wider scope of companies, local companies, they could issue structured warrants over. So if we look back at the numbers a bit, we are able to see. So right here, we have the active count of structured warrants on an average month for those years. So on any given month of those years, what was the average number of structured warrants listed on Bursa Malaysia as a whole? So this is all issuers combined. So you can see that in 2010, there were 159. If we compare it to modern day 1,205, that's close to an 800% growth. But actually, if you look at the 5-year versus 5-year jump, one of the greatest 5-year jumps actually happened quite early on, 2010 to 2015. So this is actually when retail participation for structured warrants specifically were starting to pick up. Investors were starting to familiarize with what structured warrants are, and issuers were also ramping up their warrants issued, number of warrants issued. So I think coincidentally as well, right, post 2010, after the 2008 financial crisis, in terms of the market cycles, this would be something that is beneficial for structured warrants. So at any given time, when the market is good, when it's a bullish market, volume is high, structured warrants normally get a higher participation as well. So there is some correlation there throughout the years. So something you realize as well if you start trading structured warrants. So it was also the same time in 2010 onwards where Bursa saw an influx of foreign direct investments from countries like America and Europe. And this was because interest rates were still relatively low. So these fund managers, investment entities from these companies would come to emerging markets like Malaysia to look for a greater alpha, a greater yield. And moving on to the next page, here I have the average monthly traded volume of structured warrants for all the issuers for your reference as well. So on any given month in those years, this was the number of traded volume for structured warrants as a whole. Traded volume, if you buy, if you sell, that would be a traded volume of 2, for example. So that was how many units of structured warrants was getting bought and sold during that time. So the biggest jump that is super obvious here was 2020. So during COVID, there was a huge spark in retail investors, not just in Malaysia, but actually all over the world. 2020 was also when US options participation really picked up in the US. So structured warrants also saw that huge spike in participation, in volume, and from my understanding that there was a lot of anticipation for the local glove counters during the COVID period, very highly traded, not just the direct shares, but the structured warrants issued over those shares as well. So what's comforting is usually on volatile times is when traditional investors who trade shares, for example, would slowly start to back off, right? Slowly maybe stay away from the market, exit the position temporarily. But showing the data here, what's assuring is that when investors understand derivative products like structured warrants, they are able to trade on the volatility itself, because structured warrants give you a choice whether if you're looking for long exposure, whether if you're looking for short exposure. You can buy put warrants, right, for your short exposure. So put warrants gain in value when the underlying asset price goes down. So the fact that investors knew to use products like structured warrants to effectively trade both upside and downsides of the market is a testament to how retail participants have evolved over time. So just now I mentioned that we have a few tools on our structured warrants website. So that is something that I think that most investors who want to learn about structured warrants, most investors who want to check out what structured warrants are available on the market, our website would be the perfect place for that. So please feel free to check it out. I have the website link right here. I also put down our contacts. So the Maybank warrant hotline that I mentioned, it's always ready when market hours are open. So if you have any questions, or if you are already wanting to trade on structured warrants, but you wanted to make sure if that particular warrant you're looking at could give you the price action that you're looking for, feel free to call us and let us know your questions, and we will address them right away. So that's all from me for today. I'm going to move over to the Q&A session.
Thanks, Jordan, for the very interesting lecture. Okay. Yeah, well, I felt like attending a lecture class on the history of derivative. That was very enlightening.
A little crash course.
So never have I imagined that, first derivative started in the 6th century before BC, right? Before Christ, right? So that was a bit mind blowing as well. All right. So if you have any questions to ask our speaker today, please write them at the Q&A box. Yeah, not the chat box. Okay.
Yeah, so I think Shun Kun also asked a question earlier. So outstanding warrants here, or in the chart I showed earlier, is the number of warrants that were bought and is held by the investors. So not held by the issuer. Just to address that real quick. Company warrants American stock. Okay.
I just noticed I mute myself. So I think what he meant is company warrants
American
American
stock.
style. I guess
Mm,
that's the question, right?
yeah, correct. So yes, company warrants, because they let the warrant holder exercise upon their request, then yes, that company warrants are almost all American style. And the main use of company warrants is to raise funds normally.
Mm, all right. So why nowadays the structural warrants are mainly European style?
Mm,
Would you want to consider? Would any of the issuer consider American style kind of structural warrants?
mm. Okay, I think first of all there's an operational aspect to it lah. So American style options, because the warrant holder can exercise at any time, is something that is harder for the issuers to manage as well. In terms of delta, it's hedged a little differently. So operationally, it was just easier for European style. On top of that, because now the structured warrants are all cash settled. If there were a lot of physical settled warrants still, then actually the American style would make more sense, right? Like for example, before the dividend dates of those particular mother shares, the particular companies, what one of the strategy of some American options traders would do is that they would exercise the options to get the share before the X date, so they will be entitled for the dividends as well. Another use case would normally for very deep in the money options where investors would be okay giving up the time value, because when you exercise an American option, you are essentially capturing the full intrinsic value at the time, but you are giving away the time value that the option might still have. Whereas for how we trade warrants now, European style cash settled, whatever you're selling back to us, the market maker is buying it intrinsic plus time. So price wise, it makes more sense for the investor as well, from the way I see it.
Right. So I think as far as the warrant pricing model is concerned, Black-Scholes model is the one that is often used, and Black-Scholes is more meant for European style
Mm,
because there are some assumptions that Black-Scholes cannot. Uh, it's less efficient when it comes to pricing an American style option because it can be exercised anytime, right?
correct, correct.
So European style warrant would be easier to use by all the what do I call that? Uh, Black-Scholes models based kind of pricing model lah.
Mm,
Okay, for market making. Correct.
yeah, exactly.
Okay, the next question I have on my panel is what are the differences between options and warrants?
Okay. So I guess one of the main difference would be the issuer. The issuer for US listed options, for example, is actually the exchange themselves. So the CBOE would be the issuer of those listed options. Another difference about as compared to structured warrants lah, which is issued by the investment bank, but is listed and traded on a Bursa exchange. So another difference between the two would be the standardization lah. So listed options are standardized in terms of its strike, right? So it's not like structured warrants where the issuer would have to kind of gauge demand, where what kind of strike would investors be interested in. Listed options, they standardize it across. I believe it's every 10 strikes. Yeah, but they will standardize the strike prices and list in terms of your strike and as well as your tenure. So they standardize that gap right there.
All right, thanks, Jordan. The next question here is Bursa Malaysia derivative also have an option on KLCI, right? OKLI. So may I know if this product is active? I mean, do they have trading volume? And how are they different from structured warrants?
Mm, okay. So I haven't actually checked out the local options over KLCI, but I believe is something I can look into on the Bursa Malaysia website. So probably that's my homework for tonight, lah. Something for me to look into, KLCI options.
Hmm. All right. So they are traded on BMD, lah, huh? Not on the securities market.
Right, right. It's a separate derivatives
It's
exchange.
trading on the futures market.
Mm,
Right. The next question here is are the derivative same with structured warrants? If they are different, what are the difference between them?
mm. Okay, so to Sinkai here, derivatives, structured warrants are actually a type of derivative product. So they would fall under the derivative category, just like your options, just like your forwards and futures as well.
Hmm. Yep. So warrants are a type of derivative.
Yeah.
Okay.
So maybe for me to add on a little bit or so. So why derivative products are gaining popularity? It gives the investor not just because it's cheaper than the underlying asset most of the time, but it gives the investor directly access to long and to short, so you can trade both positions, and there's a wide availability of derivatives out there in the market where you can effectively choose what kind of asset you want to trade on. So this flexibility, the able to customize your investment strategy is why derivatives are gaining a lot of traction all around the world.
All right. So the next question is, do we have futures in Malaysia? Oh, sorry, futures forwards. Do we have forwards contracts in Malaysia?
I see. Okay, so from my understanding, forwards should be quite, uh, I mean, there might be some OTC, but it's not something that we would see listed. So the difference between futures and forwards actually is that they are priced the same, but futures are listed and standardized, just like how options are. They are listed and they are standardized in terms of when is the expiry month and listed on a particular exchange lah. So that's the difference between forwards and futures.
Okay, so forward is traded OTC lah. Huh?
Ah,
So
correct.
does Maybank issue forwards?
Oh, that would be another desk to us. Not something that we deal with ECB lah. But from my
Oh, not
understanding,
under equity derivative. Ah.
forward
I
contracts
thought it's under equity derivative. No.
not something that I've heard of
Okay.
since joining at least.
So
But
likely.
overall, forwards are generally more risky than futures. Just because it's OTC, you have a counterparty risk, and it's not as transparent as a listed product lah.
Okay. Um, so I also have a question. Just
Mm,
now you talk about the difference between options and warrants, right?
mm.
Um, why aren't issuer uh, issuing options on single stock?
Ah, interesting. Why? Hmm.
Yeah, and in CBOE we have single stock options, single stocks. They have
Mm,
options on index, option on ETF, options on single stock,
yeah,
even options on currencies, right?
yeah, yeah. So
Options on even volatility. All
yeah,
right.
the VIX, right? So
Yeah.
interestingly, I also had the same question when I first joined the bank. But like I mentioned earlier, options listed in the US are listed and standardized by the exchange, whereas structured warrants is created, marketed, and well, liquidity is provided by the investment banks in partner with the exchange. So I think structurally is already coming from different points, but maybe it's something to explore locally. So that's something I cannot speak on behalf lah, but I would think that would be something interesting to look at, having listed options in Malaysia. So
So
how the
now,
demand will be like lah.
yeah, now every issuer issue warrants on a different contract spec, right? It's
Mm,
not a standardized contract, right? Unlike
right.
options in the US, right?
Correct.
Yeah.
So, um, yeah, might be something interesting for the future, or maybe something to ask Bursa themselves what they think about this as well.
Mm. All right. So I have the next question. Let me try to understand it first. If the warrant price exercise convert to mother share, does it mean that buy warrant will be cheaper or is the other way around?
Oh, okay. So I
Mm.
think I know what Colson Hawk is asking. So to address that, actually when you buy a warrant, you pay for the warrant price. But when you exercise the warrant, you also actually have to pay the exercise price. So whatever you are paying to use a physically settled warrant back then to acquire the mother share, you are paying the warrant price and on top of that, the exercise price as well. So not exactly cheaper than buying the shares directly, but if you buy the if the warrant is out the money and you buy it when it's in the money, then probably it would be cheaper than buying the shares directly. Something to, yeah.
All right. Maybe Jordan tell us now, what is that exercise ratio when it comes to structured warrants?
So the benefits of exercise ratio is to essentially make the absolute price of each unit of warrant cheaper. So overall, especially something useful for like your Hang Seng index, for your index warrants, usually you see quite high ratios on those hundreds to the thousands, and essentially is to when the absolute price of the warrant is cheaper, it's more accessible, it's easier for more investors to buy, and in turn, that will normally improve the traded volume as well. So on top of that, the exercise ratio would also affect the sensitivity of the warrant. So that is something for the issuer to strategize about.
All right. So I think you should need to think about what kind of product spec, what kind of asset ratio, what kind of price you want
Correct.
to issue so that it's more attractive and can meet the demands of the retail investors, right?
Yeah, so it's quite a balance there because if the exercise ratio is too high also, even though absolute wise is cheaper, the price action, the price gain of each unit will also be split apart more in terms of the structured warrants.
Do institutional investors trade structured warrants?
Institutional investors. Hmm. Well, I'm usually in charge of the retail desk, but I believe once in a while there would be.
Mm, okay, I understand that.
But I think most of the time, institutional clients would rather do over the counter deals because they can well customize lah the parameters according to what they need exactly.
Okay, that means these are the um uh, big companies or extra management firm.
Yes, yes.
Right? Mm, all right. Any question to ask our speaker here? I think today is more academic, so there are less questions from the floor.
Mm. Yeah, but if moving forward, there's any questions at all, especially regarding structural warrants issued by Maybank IB, there's always the Maybank warrant hotline as well lah. Can always feel free to reach out to us there.
If you look back at the chart just now you show, right? So it
Mm.
looks like you are the leading issuer with a lot of quantity sold, right?
Correct. So
Followed by CMB lah.
in terms of number of outstanding, we definitely do have quite a lead.
Mm, okay.
For this chart right here, yes.
Yeah, why is there a decline in the recent months, right? When
Mm.
all the issuer also looks like having a decline in terms of the inventory sold. Is it inventory sold or inventory issue?
This is a number of warrants held by investors. So
Held by investor.
correct, correct. So
And then
bought
at the upper part is not held. What does it mean? I don't know how to read
not
the
held by the
boxes.
issuer. That's because this was actually prepared for internal use. So just something that I thought would be good to share with the audience as well. But it's saying not held because it's not held by us, the issuer. And
Oh,
to
all right, right. Not
yeah,
held by issuer, but which means sold lah. Okay.
correct, correct.
So these
And
are not how
to
many issue, but how many is held by the retail investors, right? Or
yes,
by the
yes.
investor sold.
Yeah, so it's a way for us to
Mm.
gauge the demand for particular warrants as well lah. So you asked about the downturn, right? What makes
Yeah, why
so
recent months, right?
yeah, yeah. So that actually is usually in line with your risk sentiment. When investors are trading shares more, they want to be risk on, right? They are buying derivatives, then we will see more investors trading derivatives, buying structured warrants. And when people sell the warrant back, when we buy the warrant back from the clients, that is when our outstanding drops also.
Mm, okay. Are the trading activities in these few months okay for structured warrants?
Yeah, so I think the most obvious impact was Liberation Day, right? 2nd April, I think KICI dropped to the lowest in 1 year. So, but after that, we actually saw quite a huge bounce. At the end, by the end of April, we would have saw most of it recovered already. So in terms of trade activity, we know that there were, well, even during the downturn from 2nd April to 9 April, we actually talked to some of our investors who used our Gamuda put warrants. I think they gained 60% from that position itself in that 1 week time. So that was one of the investors that called up and talked to us about their experience during a downturn. That was first week of April. Yeah.
Mm, okay. So that leads to the next question. Why so few put warrants out there? I think if
Mm,
there are more put warrant, then investor can, you
mm.
know, buy the put during the Liberation Day, right?
Yeah, correct, correct. So that's something that we understand in terms of there is demand for puts, but overall, I think most issuers will also concur that majority of demand, the trading habits of most Malaysian retail is still to trade long. So, in terms of the pickup as well for put warrants on a usual market day, not a downturn event, not a black swan event, wouldn't be something that we see a lot of as well. So this the same goes back to that same balance for issuers, whether there is demand for these particular warrants as well. But of course, I'm not giving any investment advice, but it's just uh, talking about the supply and demand dynamics in the structured warrants market.
Also because the demand is low, so there are so few puts out there.
Yeah.
But in in America,
Mm,
uh, puts are consistently in high demand. I think due to a lot of investors who want to hedge their portfolio, right? Be it retail
mm,
or be it insti clients, right?
correct, correct.
Why are there so few like insti players here in Malaysia who want to buy put to hedge their portfolio?
Okay lah. I mean, it's hard for me to say whether it's few or not because if these deals are done over the counter, it's not something that we know exactly how much of it happens as well because they don't buy structured warrants to do it, right? They may enter into a downward short position through other methods, uh, and it's not something that we see on the public listed markets lah. So hard to for me to say whether or not this is not happening in the local FI scene. But understand in the
Mm.
US, because a lot of the traders are also intraday. So on any given 1 day investment horizon, any downturn, then there would be demand for the puts already for the US listed options.
Okay, so you're saying that the local institutional investors they may have other means to hedge your portfolio instead of just purchasing the listed put warrants lah, right?
Yeah,
Okay.
correct, correct.
So the next question by Courtney is how do we consistently make profit using structural warrants in this turbulent market, and especially when the economy is not looking very good?
Okay, okay. Um, that is a tough question actually. So I am not in a position to give investment advice, but if you have a very bullish view, if you are very confident in your view, then it's not something that you need structured warrants to gain the exposure you need as well. It also depends whether if you're trading on a technical analysis basis, how long is your investment horizon. So all these things should be taken into account. But um, I wouldn't have the secret sauce for you on how to consistently make money with structured warrants. But as you understand more about structured warrants, you would have a few ways to utilize it to your advantage, lah, especially on significant upturns, significant downturns. But at the end of the day, structured warrants are not something we advise our investors to buy and hold for too long also. It is a short-term trading tool. If you have a short-term view, you can take it using structured warrants, long or bear, bull or bear. But we wouldn't advise investors to hold it over months and months of time, actually, structured warrants.
All right. So from your experience, right, during times when volatility is high, would you as a issuer prefer this kind of period as volatility is high? Then would that increase the trading volume of structured warrants?
Yeah, correct. So we definitely prefer bullish because like we saw in the charts, when the markets are bullish, then that's normally when the trader volume is at its highest. Because when we talk about volatility that could go both ways, right? When the risk sentiment is off, there would still be jitters. There will still be a fear that they are a fear to take a position either side because they wouldn't be sure on which direction the market would go next. So bullish markets would always be the best case scenario for us. Uh, but when volatility is high, it's not too bad as well.
Mm. All right. So I think I believe when the volatility is very high, it may also disrupt your um, hedging strategy, right?
Yeah, correct, correct. So there is a implied vol aspect to structured warrants pricing, and that will be taken into account as well.
So just now, one of the participant mentioned about 0 day to expiry options.
Mm.
So my question to you here is, how shorts are the shortest warrants ever issued? Like, is it 3 months? And would you consider to issue, okay, I wouldn't say zero DTE lah, maybe 1 week, right? Because maybe investor nowadays, the appetite shift towards more,
Mm.
um, uh, I wouldn't say sensitive, okay, or where the gamma is highest, right? Where the shorter the tenor, the shorter the expiry, the gamma is the highest, right?
Mhm.
So, what do you think?
Yeah, so understand your point and like just referencing the US, right? Why the demand is there, but
Mm-hmm.
in terms of Malaysia, in terms of Bursa, there is a regulation where we cannot issue anything less than 3 months. So, for example, the shortest tenure of structured warrant we have is 3 months. I believe it's over the Hang Seng Index. So, in terms of single stock, I think our shortest would be 6 months or so. So it's maybe something that we can explore, but it's something that would take both sides, regulator and issuers, to ponder over lah. First there is if the retail market is ready for that, and second if the issuers will not lose too much money issuing these kind of products.
Oh, okay. So it's not you don't want lah. It's just that um, the regulation does not allow you
Mm.
to issue shorter than 3 months, right? And shorter dated warrant have a higher risk for issuer to hedge your position. Am I right?
Correct, correct. So our goal as the issuer is to hedge off the risk in the same time providing an investment tool like structured warrants. So when it's a new product like this, it's not really tested. So it's something to uh we have to test case it, check it out operationally whether it's feasible or not. And then to your point lah, day to expiry options, the risk is definitely higher as well.
Okay, so so from experience issuing so many different warrants of different counter and different spec, right? Do retail investors generally prefer longer dated kind of warrant or shorter dated kind of warrant?
Ah, I see. So I think this really depends on the investor. So, for investors who like um, Let me think about this. Yeah, it really depends on the investor lah. I have investors who look for short dated options because they can experience more of the intrinsic value change. But I also know investors who might like longer dated options just because they are not trying to rush on the timeline. Maybe their analysis is already on a more fundamental basis. So they aren't trying to time the market, they're just trying to stay and keep that exposure with longer tenure options with less decay.
Mm. So how would you advise us as a traders, right? Um, if I'm a trend trader, what kind of spec should I look for in warrant?
Mm,
If I'm a swing trader, what kind of spec I should look for in warrant? If
mm.
I'm a intraday or contraday trader, what kind of spec should I look for in warrants?
Understand. So there is a balance between your effective gearing and your sensitivity. So these are probably the points that you are trying to look at, and of course your moneyness of the warrant as well. So if you are a swing trader, that's timeline of usually 2 weeks, right? So if you are looking for something that how do I say, tracks the underlying asset closely, right? If the underlying asset moves by 2 ticks and you want your warrant to already follow that price change, then you should be looking for warrants with that are more sensitive with a lower sensitivity tick number. But if you are trying to maximize your potential return, then the effective gearing is more on what you should be prioritizing, a high effective gearing. And that what that essentially tells you is the multiplier effect, the leverage that these particular warrants can give to you. So a useful tool for investors to filter out these kind of parameters that we're talking about. Uh, that's why we created the warrant search function on our website. You can actually filter out all the warrants. So it's not just the warrants issued by Maybank IB. We have all the warrants issued by all the issuers, and you can filter out. You want calls, you want puts. If you're looking for a certain underlying asset, if you're looking for a particular sensitivity, effective gearing, or moneyness. So you can filter out by all these other parameters as well. And that's why I think a lot of investors actually do use our warrant search and our, of course, our live matrix as well on our website.
All right. So if you're uh, very serious about trading structured warrants, then you must check out all these tools that are offered by the issuers, lah. So you
Mm,
can find a warrant that is just right for your strategy.
yes, correct.
Mm,
So we did create the warrant website for the investors to check out in terms of education, to do their analysis on there, and just to stay engaged with whatever's new with warrants as well, lah. So it's
mm.
a good reference point. It's a good channel. And of course, we have our Telegram channel as well. That's where we share our daily updates. So you don't even have to go anywhere. It'll come right to you every morning.
Right. Now we know that the warrants have effective gearing, right?
Mm.
So do the effective gearings change from time to time?
Yes, yes. So effective gearing is something that is dynamic. So it is also dependent on the delta because the formula for effective gearing is your delta multiplied by your gearing. And what gearing actually tells us is um, how much more it costs to buy the share directly as compared to buying the warrant using the warrant price. So when you count the gearing, which tells you how much you're saving, you multiply it by the delta, which is how closely the warrant price follows suit to the underlying asset. So if a warrant has a delta of 50, for example, and the underlying asset moves by 1, your structured warrant would move by 50%. So that's how it adds up. But together, what the effective gearing tells you is if my underlying asset moves by 1 and I have an effective gearing of 5, for example, then my warrant should increase or decrease by 5%. So effectively, it's telling you the multiplier effect. How many times more would this warrant price move as compared to the underlying asset price change?
Okay, so you're saying that effective gearing is dynamic depending on the delta change.
Mm.
So how about gearing? Is gearing dynamic or gearing is constant?
Gearing. So because the share price is something that changes as well, so it would be dynamic as well. Actually, yeah,
Okay,
yeah, correct.
all right. So gearing is dynamic, and effective gearing is also dynamic, right? That's why we must always check lah. So the effective gearing of the warrant changes every single day, right?
Yeah, correct, correct. And these
Or do
two.
we update it like every single minute if there's a big move in the underlying?
Okay, so in terms of like our Warren website, it refreshes every 15 minutes lah, at least. So you will know that every 15 minutes it will update itself. At the bottom of the website, it would normally say, oh, when was the last refresh time? So something that you can double check on as well. But so far, our website can refresh and update the figures every 15 minutes. So that includes the live matrix as well.
Okay. So can you tell us the relationship between effective gearing and sensitivity?
Right, right. So, interestingly, sensitivity and your effective gearing actually goes in opposite direction. And a way to track or the way to think about it is when you look at your moneyness, how in the money, out the money, or at the money your structured warrant is, then the effective gearing and the sensitivity would actually follow in opposite directions. So let me give an example when a structured warrant is very out the money. So that is actually when the effective gearing would be higher, and that is actually when your sensitivity will be lower. So you need the underlying to move more, then only your structured warrant would follow suit when it is out the money. But overall, the effective gearing, the multiplier effect would be more as well. And this can also be contributed by the overall cheaper warrant price. So let's say the same structured warrant move to super in the money, then you realize that your delta is high and your sensitivity would be very sensitive. It will track the underlying much more closely as compared to a out the money warrant. And conversely, your effective gearing will normally be lower when the structured warrant is already in the money.
All right. Thanks for the clarification, Jordan. So, ladies and gentlemen, that's all the time we have for Q&A with our speaker today. So, thank you so much for tuning into this session. So, let me just take over the slide control. Yeah.
All right, sure.
Okay. Just give me a minute. So, ladies and gentlemen, you just listen to the analysts, okay, from equity derivative or equity commodity and derivative division of Maybank Investment Bank, Mr. Jordan Chiu, who shared with us, structural warrants, the past and present, how it evolved, okay, when they started, okay, when they start, how it evolved, where are we today, and how do we use it to complement our trading objective. Right. Thank you so much, Jordan.
All right, thank you, Shane, and thank you, the audience, for taking the time.